In 2024, gold had its best annual performance in more than a decade, outpacing all major asset classes, including stocks, bonds, and commodities. My name is Paula Ojeda, and I am here with my colleague Juan Carlos Artigas to talk about the factors behind last year's performance and what to expect in 2025. So, JC, what drove gold's impressive rally last year?
Thanks, Paula, and I agree. It was a remarkable run by gold last year, rising by 26% year on year. Now, behind these, there was very strong central bank demand, as well as robust Asian investment, which was later supplemented by Western flows. Now, underpinning these, there was heightened geopolitical risk alongside a very busy electoral calendar, as well as the beginning of rate-cutting cycles by the Fed and many other central banks.
And given how well gold has done, what can we expect for 2025? Can this rally continue?
There's going to be four factors that influence gold's performance. First, the health of the global economy. Second, the number and magnitude of risks that investors face. Third, the level of interest rates. And the fourth one, the momentum that the gold market itself might experience. Now, what does this mean? Current expectations of GDP, interest rates, inflation, and other macro variables would imply a much more modest performance by gold in 2025. However, the reality is that rarely ever the global economy performs according to consensus expectations. From these, we believe that gold may outperform if a few things happen. If we see stronger than expected central bank demand, or if financial conditions worsen, leading to flight to quality flows. What can lead to these? Well, there's plenty things to mention. For example, there's ballooning levels of sovereign debt worldwide. There's also a lot of uncertainty around the impact that potential tariffs may bring. And then finally, there's an undercurrent of continuous heightened geopolitical risk that investors are facing. Now, on the flip side, however, if the course of monetary policy changes and we start to see significantly higher interest rates, that could bring challenges for gold.
So, JC, with all these factors in mind, what can investors expect in 2025?
Yes, you're right. There's quite a few moving parts. Now, knowing these, we've built quite a few tools that can help investors navigate the very complex environment that we are all facing. I'm going to flag two in particular. First, our Gold Return Attribution Model, or GRAM, allows investors to track the factors that can influence gold's performance on a week-by-week or month-by-month basis. In addition to that, we also have our interactive tool, Quorum, that allows investors to look at how gold may perform across a variety of macroeconomic scenarios. And one of the good things about Quorum is that investors can also modify those scenarios to reflect their own views and then understand gold's potential performance under those conditions. Both these tools are available on Gold Hub. But before we wrap up, I want to ask a question, Paula. What are some of the key takeaways from your interactions with investors?
Based on market research we've conducted, as well as direct conversations with investors, we generally see that gold is underallocated in portfolios. However, interest is increasing, and with that, the understanding of gold's value proposition. This means that ownership has significantly and steadily increased over the last few years amongst institutional investors. And although most investors already understand gold's attributes as an inflation hedge and as an effective diversifier in a portfolio, they're now also recognizing it because of its high liquidity profile, as well as its ability to contribute to long-term returns.
Thank you. That actually resonates with me as well.
Great. Thank you. And with that, we conclude our update. To read our outlook or more of our research, visit goldhub.com. Thank you for tuning in.